Imagine checking your email and finding a message from a company. We want our shares back. Wait, I bought these shares because I believe in this company. Now they want them back. Should I sell? Is something wrong? Many of us get confused. But buybacks are not random decisions. If you're putting your money into stocks, you should know what's happening when a company decides to buy its own shares back from the market. Understanding buybacks isn't just about financial literacy. It's about taking control of your investment journey. In this video, we'll cover 3 things. What exactly is a share buyback? Why companies buy back their own shares? And types of buybacks, tender offer versus open market offer. When a company announces a buyback, they're essentially saying, we want to purchase our own shares back from the market. Simple as that. Think about it like this. When you buy shares of a company, you're buying a small slice of that business. In a buyback, the company is buying back some of those slices, which makes each remaining slice a bit bigger. Take TCS, for example. In 2022, they announced a massive rupees 18,000 CER buyback offering to purchase shares at rupees 4,500 each, well above the market price at that time. But why would companies do this? And more importantly, is it good for you as an investor? Sometimes companies have extra cash just sitting around and decide to buy back their own shares from the market. But why would they do this? Let me walk you through the main reasons. When a company thinks its stock price is lower than it should be, buying back shares is basically like finding their own stock on sale. Take Infosys. Back in 2019, they announced a massive rupees 260 CR buyback at rupees 800 per share. This was their way of signaling to the market that they believed their shares were worth at least that much. Next, what about companies with too much cash? IT giants like TCS and Wipro generate enormous cash flows, but operate in mature industries where rapid expansion isn't always the best move. In these situations, returning excess cash through buybacks can be an efficient way to reward shareholders. Another common reason is offsetting dilution. When companies issue new shares for employees' stock options, existing shareholders get diluted, which means their percentage ownership decreases. Buybacks help balance this out by reducing the total number of shares, keeping your slice of the pie relatively stable. Beyond dilution management, buybacks can also serve as a defensive strategy. Companies may repurchase shares to prevent hostile takeovers by reducing the number of shares available for acquisition. By taking shares out of circulation, they make it more difficult and expensive for potential acquirers to gain control of the company. Some companies have less noble reasons for buybacks. They might use buybacks to boost metrics like earnings per share without actually improving their business performance. And finally, management might initiate buybacks just to create temporary demand for shares. It's like putting a fresh coat of paint on a house with foundation problems. Music companies typically buy back shares in one of 2 ways. The first method is what we call a tender offer. So, the company sets a specific price, usually at a premium, and invites shareholders to sell their shares directly to the company. Take TCS's 2022 buyback. It was a tender offer at Rs 4,500 per share, well above the market price. If too many shareholders want to sell, the company buys back proportionally from everyone who tendered. You can participate in tender offers in Zerodha by following these steps. First, log into Kite, click on Bids, and then on Corporate Actions, click on Place Bids. Finally, enter the number of shares and click on Submit. The second method is an open market purchase. The company simply buys its shares from your stock market over time, just like any other investor. Wipro has used this approach for some of its buybacks, gradually purchasing shares from the market. For open market buybacks, you don't need to do anything special. You can sell your shares if you decide to participate. And you can learn more about applying for buybacks by visiting this support article. Now, understanding buybacks is just one more tool in your investing toolkit. While they might seem complex at first, they're really just another way companies manage their capital and potentially return value to shareholders. Thank you so much for watching and see you in the next video. Please follow and subscribe the channel The Wealth Learner.